Welcome to the Friday edition of Tech Stocks Daily, where we're ending the week with a roller coaster of tech excitement. Today, we're unraveling the buzz on Zscaler's big money moves and skyrocketing earnings, Curtiss-Wright's standout momentum in aerospace, and SAIC's intriguing financial forecasts, paired with a cherry-on-top cash dividend announcement. We've got bullish surges, strategic maneuvers, and some sector-defying competition. Whether you're an investment whiz or just here for the market drama, we've got insights that might just make your portfolio dance. So plug in, stay tuned, and let's dive into the electrifying world of tech stocks together. Hey tech enthusiasts, let's dive right into today's buzzworthy tech company, Zscaler, which has been making quite the splash on the NASDAQ. First up, Zscaler is grabbing attention due to a significant surge in options activity, pointing out that investors with some deep pockets are showing interest in the firm's future. With approximately 60% of these big money traders being bullish and just 33% bearish, it's clear there's some optimism in the air. The eyes of many have been on options ranging between a price band of $185 to $300, suggesting some pivotal moves in Zscaler's potential value. This unusual options activity has us wondering, does someone know something big is about to happen with Zscaler? On another note, the cybersecurity firm has been riding a wave of strong financial performance, as showcased in its recent Q3 earnings report. Zscaler's non-GAAP earnings of 84 cents per share demolished the Zacks consensus estimate by a hefty margin, outpacing earnings from the same time last year. Revenues also surged to $678 million, beating forecasts and supporting management's own guidance. Looks like those zero-trust exchange solutions are winning hearts across enterprise customers, an adoption rate fueled by the rising demand for AI-driven security solutions. This pleasing financial outcome is even more impressive given Zscaler was already on a streak, having beat estimates in all 4 of the last quarters. That track record certainly has investors feeling confident, which also likely fueled the bullish options activity. Zscaler stock has become quite the rising star with impressive year-to-date growth. Let's not forget, regional revenues paint an exciting map as well, with half of the income coming from the Americas, a third from EMEA, and the Asia-Pacific region rounding out the remainder. What's not to love about global traction, right? Oh, but the bright news doesn't stop there. After this quarterly triumph, Zscaler decided to bump up its guidance for fiscal 2025. Zscaler now projects revenues of $2.659 billion to $2.661 billion, smashing prior estimates and guidance. It seems the increased demand across all of its platform offerings, including ZIA and ZPA, is kicking goals. Analysts aren't sitting on their hands either. Following this earnings surprise, they've been tweaking their forecasts. Some have chosen to stay positive, or overweight as they call it, while others maintain a more cautious neutral stance. But overall, the sentiment remains largely positive, with a target price speaking to potential for more investor enjoyment. Of course, as with any investment, risks are inherent, especially in the world of options trading. But with votes of confidence from institutional analysts and big bet investors joining the party, Zscaler's trajectory seems tilted towards the sunny side. There you have it, the whirlwind of news around Zscaler in one jam-packed rundown. Whether you see this as an opportunity or just a point of interest, keeping an eye on Zscaler could be worthwhile in the exciting world of tech investments. Ladies and gents, tech and finance aficionados alike, today we're diving into why Curtiss-Wright hit the news waves in such style they almost needed a runway. And believe me, they'd probably build it too. Curtiss-Wright has recently emerged as a standout performer on the NASDAQ, making quite the splash in the investment scene, ranking number 2 by Zacks rank, a nod of approval every stock would die for. So why exactly is this engineering powerhouse making headlines? Strap in, because we've got some juicy financial tidbits to explore. First off, Curtiss-Wright has tantalized investors with its attractive momentum, earning a solid B in Zacks' momentum style score. Let's decode this. In Wall Street lingo, momentum means riding on the favorable trends of a stock's price movements. Curtiss-Wright is doing just that and doing it exceptionally well. Over the past year, its stock price jumped a staggering 57.99%, and just when you thought you'd seen it all, it outperformed its sector and peers, which, let's be honest, is no small feat in the highly competitive aerospace defense equipment industry. Second on the agenda, we have some solid earnings estimate reviews. Oh, how analysts love those delightful upward revisions. In the past 2 months, Curtiss-Wright's earnings estimates have been revised upwards 5 times, with precisely 0 downgrades. You read that right, zilch, nada. Its consensus estimate went from $12.20 to a dazzling $12.61 in just 60 days. That's got to feel like the equivalent of acing your stock market midterms. Moving on, let's talk about volumes. Not the Harry Potter kind, financial folks, but trading volumes. Over the past 20 days, Curtiss-Wright's shares have been exchanging hands at an average of 312,813 units, a bullish sign of thriving interest. More arms in the air at the Curtiss-Wright auction means good vibes for investors. And it's not just about individual success here. Our engineering champions are proving to be rock stars not just in their industry, but also against a larger gamut of aerospace stocks. Since the beginning of the calendar year, Curtiss-Wright's returns have soared by 24.3%, eclipsing the overall aerospace sector's return of 16.8%. A little friendly sector rivalry never hurt anyone, right? Even team players like that ultimate overachiever Huntington Ingalls haven't stolen CW's thunder, despite their own stunning market performance. Which means that, for now, Curtiss-Wright is not just piloting its own success column, but raising the bar for industry excellence. So there you have it. Curtiss-Wright is the talk of the NASDAQ town, wowing investors with its momentum superpowers and earnings bravado. Whether you're a bull or a cautious investor, this is one name you might want to keep an eye on. Today, Science Applications International Corporation, commonly known as SAIC, made waves in the tech news scene with not one, but two major updates. So buckle up, because this is going to be a ride in the world of IT ingenuity, market expectations, and finance buzz. First off, SAIC is trending thanks to updated forecasts and hot-off-the-press analyst predictions ahead of their Q1 earnings release, scheduled for Monday, June 2nd. Analysts are expecting things to keep climbing the financial ladder, projecting earnings per share to jump from last year's $1.92 to an optimistic $2.13. That's right, bringing home those dollars while taking a calculated ride up from last year's predictions. Revenue won't be too shabby either, with projections decorating the 1.87 million mark compared to last year's massive 1.85 billion. Blink, and you might miss the leap. And in personnel news, SAIC has tapped Kathleen McCarthy to be their newest executive vice president and chief human resources officer. Maybe she'll bring in some new talents that will boost these earnings even more. Just speculating, really. Not to be overshadowed, the second flash of excitement from SAIC is about cash dividends. The board of directors has announced a declaration of cash dividends at 37 cents a pop, scheduled for a payout on July 25th, 2025, to those listed as stockholders by July 11th. It's like a mini payday if you're one of the lucky shareholders. SAIC is spotlighted as a mission-focused company that keeps pushing the envelope of innovation. They have their fingers in defense, space, and more, aiming high and hitting those technological home runs. What's the catch? Oh, just the usual nudge of caution. SAIC doesn't want you to take those happy numbers as guarantees of future performance, because after all, world markets are as unpredictable as the weather. They advise not to rely too heavily on these forecasts, as actual future scenarios could do a bit more cha-cha than waltzing in a straight line. Now on to you. What are your thoughts? With the current prognosis and strategic maneuvers by SAIC, how does the future look for this tech behemoth in your eyes? Are you jazzed about the financial forecasts, pumped for potential dividends, or are you cautiously scrutinizing the forward-looking statements menu? Spill some beans in the comments. Let me know what you think. This isn't just a broadcast, it's a conversation. So hit me with your takes below. All right, tech aficionados, let's channel that crystal ball energy into the stock market and give you my take on Zscaler. Based on the exciting news pouring in today, I'd lean towards a buy for Zscaler. But of course, don't just take my word for it. Let me walk you through why it caught my eye. First off, there's a notable surge in options activity surrounding Zscaler that can't be ignored. When deep-pocketed investors are showing a show of confidence, or even bullish behavior, something's steering their interest. Couple that with the fact that Scalar's recent earnings report was stellar, outpacing expectations with non-GAAP earnings of 84 cents per share. Not only did they demolish the Zacks consensus estimate, but they outshone their own previous performance. Ding ding ding, that's a tempting bell for growth. They're also benefiting from increasing revenues, hitting $678 million ahead of forecasts, and are definitively making waves with their Zero Trust Exchange and AI-driven security solutions. With cybersecurity as a forever hot ticket, especially with AI enhancements driving adoption, such forward momentum is likely to continue. Moreover, after revealing their impressive earnings, Zscaler expediently nudged their fiscal 2025 guidance upwards, showing a solid forward-thinking strategy and clearly positioning themselves for more growth adventures. Now, don't forget, Wall Street analysts are largely positive, though with a sprinkle of caution. If the sentiment surrounding Zscaler remains upbeat and given their robust plans to leverage current demand, snapping up this stock seems appealing, especially if you're looking for growth stories in your portfolio. But hold your horses a bit before you dash off to hit the buy button. Always, and I mean always, do your own research. The tech investment world spins fast, and it's important to factor in your personal investment goals and risk tolerance. Consider all angles, read multiple opinions, dive as deep as you can into company reports and forecasts, and stay updated on market trends. So, what do you say? Is Zscaler the shiny new thing in your portfolio, or do you want to reflect more on it? Let's discuss where Zscaler fits in your broader strategy. The comment section is all yours to voice it all out. Wrapping up this tech news extravaganza, Zscaler's got the market buzzing with bullish investors and stellar earnings, while Curtiss-Wright flexes its financial muscles, and SAIC keeps us on our toes with optimistic projections and juicy dividends. It seems the NASDAQ's flavor of the day is all about growth, momentum, and forward-thinking strategies. If you enjoyed today's tech vibes, don't forget to like, subscribe, and share with your fellow tech lovers. And hey, whether you're diving into stocks or just vibing along, I'll catch you on Monday for more tech tales. Have a fantastic weekend, everyone.